Howdy there, folks. Boy, do we have a lot to get into in this one here today. Oh my gosh, we got a lot of stocks, a lot of things going on in the market. Appreciate everybody joining me. As always, thanks for being here, folks. If you're wondering why I'm in the garage, got kicked out of the house. You know the rules. Yeah, one of your stocks goes down big, you get kicked out of the house. So last year I spent a lot of days outside the house, I'll be honest, man. It was a lot of days, but it's been pretty good since November. I'll be honest, it's been actually great since November. I've been in the house a lot, but yeah, today I don't think I'm quite allowed inside because Honest had to completely blow it, okay? Man, do we have a lot to get into in this video. We'll talk about Honest here at the top. Then we got a ton more things going on in the market and other stocks to talk about. Honest, down massively. It wiped out all the gains in the public count here date. All of them. I mean, it should have been a great day for the public count, but that one stock knocked out everything. So what happened here? Well, they reported earnings, okay? This is the last quarter of Nick Vlahos, okay, who did, let's call it, a horrible job of executing the business. Got a great brand here, but just he did a horrible job with actual execution of the business, to be quite frank. And it shows. This was his last quarter as CEO. And total revenue growth at 2%. I mean, this should be a company that's consistently in the 5 to 10% range. I mean, 2% was just it's an awful number, okay? Absolutely awful number. Now, they blame this on skin and personal care. Revenue, 28% for the quarter. It decreased 13% due to a key digital customer reducing orders, essentially. So I'm guessing that was Amazon running inventory really tight. And this is something we've heard from almost all these retailers are running inventory really lean right now. Amazon, Target, Walmart. And the reason being is obviously so many of them got wrecked by too much inventory in 2022. Then it had a heavily discount. It hurt their margins. And so right now, a lot of these retailers going into 2023 are trying to run inventory very, very lean. But nonetheless, I feel like, that's still just an excuse. At the end of the day, the numbers are poor out of this. And thank goodness for household and wellness up 100%. Because if it wasn't for that, let's be honest, the revenue would have been negative for this company, okay? And when it comes to digital, right? Digital disaster, complete disaster, down 14%. Yeah, retail was up. That's great, up 18%. But I mean, still, digital down 14%. That should never happen. Like, you shouldn't have digital numbers going down. No, okay? Now, the good news is, obviously, Carla, who's a new CEO who's taken over here in the past few weeks. The good news is she actually was a vice president of Amazon. So, if anything, obviously, that she should kick the digital business up quite a few gears over this next few years, nonetheless, okay? This makes me so disgustingly angry, it's not even funny, okay? Because here we are with this Nick Vlahos, right? He ran the company, and, the company has this really good brand that I think is really because of Jessica Alba and some of the other team members. I don't think it had anything to do with him. So as CEO, it's really about execution, right? Execution. This company went public at $16. It's $1 or $2, right? Obviously, the stock price doesn't reflect it. The business results, this last quarterly numbers didn't reflect it. And what does he get? Does he just get fired? No. It's a $5.8 million CEO transition expense the company has to incur, right? And this is a frustrating thing, I think, for all of us that are stock market investors, is when a CEO does bad, they get golden parachutes when they get fired. And it's like, if I do a bad job, nobody watches the channel, right? If you do a bad job at your job, you're canned, right? Like they'll can you. You're not getting a golden parachute package. They're bye. And yet for these executives, these CEOs, they could do a bad job and then they get millions of dollars because they get fired. Because they get fired for doing a horrible job. Isn't that something else? There should be some sort of rule where it's like, if you do a crap job, you don't get a golden parachute. But these guys and gals, they still get these golden parachutes. It's one of the most frustrating things. And this is what obviously corporate raiders like the Carl Icahns and those folks have been speaking about for as long as, way before I was on this earth. Let's just put it that way. They've been frustrated by, how these companies are run, the executive packages these folks get. You do a bad job and you still get millions of dollars just to get fired. It's like, what a sweet gig, right? Do a bad job. It's almost like you want to get fired on purpose because then you get millions of dollars when you get fired. It's a beautiful, beautiful thing, right? Now, a lot of people want to know, obviously, do I still think Honest is my next elf, right? Do I think Honest is my next elf? I would call it, it's not looking great, okay? I would say that it's not looking very good in regards to this whole situation, right? I'm hoping Carla turns around this ship and actually executes it. I listened to the conference call. She sounds focused on profitability, sounds focused on margins, all those things. But at the end of the day, that's all just talk, right? She came over from General Mills. She was a former vice president of Amazon, obviously. She's got a lot of good experience, but now it's like, dude, you gotta put up the numbers now at this point in time, right? And so I'm not gonna even get too excited about it because it is what it is, right? So I'm going to hold the stock, but it's a very, very frustrating ordeal. Very, very frustrating, right? And, it brings me back to kind of like the dividend account, right? I mean, just look at this. But at the end of the day, what do I hold in the dividend account? A lot of stable, great companies, very profitable, right? Profit machine companies, cash flow machines, and look at how well that account's been performing. It's been performing terrific. And you got some of these other companies with more unproven CEOs, obviously, haven't been in the public markets for long, and just very, very tough sledding, right? Let's be quite clear. The bulls are back in charge of this market now at this point in time. Meta, another massive day up for us here today in the public count, up $13,000 in regards to Meta. When it comes to Meta, I mean, Zuckerberg, I'll be honest, Zuckerberg was asleep at the wheel for a little bit there, and this man's woken up in a huge way. And he has totally gotten this company focused on efficiency, profitability. Obviously, they've cut a lot of employees because they were way overhired. And I just would say Zuckerberg is, I think over this next few years, is going to put up the best job he's ever done as being an actual CEO, running a business on a high level and actually executing, right? And not just this pie in the sky like, oh, we might do this and all this stuff, right? Of like actually executing and putting up the numbers. And Wall Street's becoming very obviously confident in this. And this is why the stock just continues to outperform the market in an epic way. It's not like it's a small outperformance. It's massive outperformance. This stock was what, $200 today? $200 plus? And think about this. Just back in early November, the stock was under $90 a share. It just goes to show you the momentum that's coming in the stock. And look at the market since the beginning of November. It's not like the market's been booming by any stretch of the imagination, but I can tell you what has been booming: Meta stock, right? Tesla stock, obviously, decent day here today, 2%. I think in regards to Tesla, the bulls are still in charge in this one as well. The bears have been trying to bet against this one, but at the end of the day, obviously with the executives obviously talking about they don't expect any margins to be hit in any significant way this year, even after the price cuts. And we know demand's ramping, right? And we know Cybertruck's going to start ramping up at some point this year and obviously ramp big time next year. I mean, it's just a really hard stock to kind of get down right now. I'll just put it that way, because you don't really have anything at this point in time to push the stock down, just to be quite frank. And so that's why it continues to be in a good place. And this is just another one of those stocks that, honestly, the bulls are in full charge now at this point in time. The bears hope to be in charge, but they just can't get control of this game now at this point in time, right? Amazon, again, strong day for Amazon stock, 4%. Obviously, of the big tech stocks, this is my main focus for this year. I'm kind of a little bit upset about this. I don't want this stock to go up short term. I wanted to build the stock up to at least, $100,000 to $200,000 type position before it starts going up. So my hope is it goes back down, the market chills a bit, goes back down, pushes Amazon down, because I'm not ready for this baby to get rolling yet, okay? It has my permission to start rolling in about 6 months from now, but not yet, okay? For right now, Amazon, please chill. Oatly, this is another one of Oatly, Tattooed Chef, Honest, they're all in the same category, right? Of just companies that have just been, just obliterating me, to be quite frank, right? Stocks that I got in late 2021 in the hype cycle of the hype market, and just they've treated me very bad. Let's just call it that. Now, Oatly's a little bit of an interesting situation here, because it is showing differences between TTCF and Honest, right? Honest isn't really like a bankruptcy candidate. TTCF is a potential bankruptcy candidate if they don't fix something soon in regards to that one, right? And Oatly was kind of going down that TTCF path, but now they just raised a ton of money. So now they got literally hundreds and hundreds and hundreds of millions of dollars of liquidity. And they reported earnings. The stock's actually up since earnings. And the reason being is, you look at their outlook here, it's actually a respectable outlook, right? 23 to 28% on a constant currency revenue basis for growth for 2023. Gross margins to improve sequentially throughout the year and reach the high 20s by the fourth quarter. Now that is absolutely huge, and that is absolutely key, right? The company believes this progress will enable full year fiscal 2024 to deliver positive adjusted EBITDA. Massive statement there. Right now, still they got to execute on that. But we're really, when it comes to a lot of these companies that were the money losers, right? Some of them are going under. Some of them are, just to be quite frank, are going under. Others are going to skate through the situation and they'll get their businesses to profitability, right? And the ones that will make it to the other side, I think those executives will always be appreciated by Wall Street and will be respected on a very high level. The ones that do make it through this mess, right? Of like these companies that lost a bunch of money and then will make it. But I can tell you there's a lot of them just aren't going to make it. They don't have the business models to get there, and they don't have the executives to get there. But I will say with Oatly, it's looking promising. Am I buying Oatly stock right now? No, absolutely not. I'm just a holder of the stock. I can't put more money into any of these companies that it's like, oh, we're going to do this someday and whatnot. At the end of the day, for I've been this way for months now. These are just kind of like hold positions for me, right? Another great thing that Oatly has obviously going for it right now is oat futures continue to be in a bad spot. 1 year, oats are down almost 48%. Obviously, oats and water are the main ingredients that go into Oatly. So that's very, very important in regards to that one. So yeah, I should see nice margin improvements throughout this year for Oatly. And, we'll see. We'll see what happens with that one. Obviously, I'm still a believer in the company. I just can't buy it. I just have to hold the shares that I currently have, right? FedEx. My gosh, look at the FedEx stock. Oh my word. 4.4% up in the trading day today. 11.5% move after hours, right? Absolutely incredible move from FedEx here. And FedEx is always a good company to gauge how the economy is doing, right? And if we look at the numbers from FedEx here, okay, you got to ask yourself, is it the economy really helping them, or is there something specific going on with FedEx, okay? And you can tell very quickly here that it's a FedEx-related story and not an economy-related story, right? Earnings for this past quarter, $341 adjusted versus $273 was expected, so much better than expected on the earnings per share line, right? Revenue did miss expectations, and it was down quite a bit from a year previous, right? So in regards to a company like FedEx, this is clearly an earnings per share story. This is clearly a cost-cutting story, and it's clearly FedEx-specific. So when you see FedEx stock up 11.5% after hours, don't think it's because FedEx says the economy is great and it's only boom times from here or something like that. It's a very specific FedEx situation. One of the reasons that stock fell all the way to under $150 was because honestly, their EPS was getting destroyed. They were coming in with bad quarterly numbers, especially on the EPS side. And when it comes to stocks in the market, right? You have different stocks kind of fit into different categories. So the growth stocks, everybody's looking at really revenue growth for those sorts of companies. That's always like the most important metric, right? But for a stock like FedEx, revenue growth isn't the most important thing for a company like that. Everybody looks at earnings per share. That's what that shareholder base really values. And so you see a revenue miss, but an EPS beat, and you see the stock up huge because that shareholder base, they care about earnings. They care about profitability. They care about EPS. They care about net income, okay? That's what they care about over there. So, I guess, we can't get too excited or depressed in regards to the FedEx numbers in relation to the economy, right? Now, I don't know if you guys saw this, but obviously with everything that's going on in the banking system right now, right? The Fed is, guess what? They're starting to potentially increase their balance sheet again, and quite substantially, right? The programs ramped up the totals on the Fed balance sheet, escalating to a total of $297 billion. Some of the numbers you'll see from Fed balance sheet from some websites out there are a little lagging indicators, right? And so now we have potential, let's just call it balance sheet expansion from the Fed. And man, it's crazy how quick it can switch, right? From the Fed reducing balance sheet, $600+ billion to now, hey, balance sheet might increase from here. We'll see what plays out there. But this is why bulls are in full charge of this market right now. Because now at this point in time, right, think about what we got going on. You've got a lot of companies reporting what sounds like kind of troughish earnings right now, like fourth quarter, first quarter, right? And are expecting 2023 to kind of get better as the year goes along. You have analysts that have brought down their expectations for all these companies in a massive, epic way, right? You have a lot of companies that are really focused on their bottom lines. They're going to watch their bottom lines very heavily, which is going to, guess what? Help margins and profitability, which again makes the probabilities these companies come in and beat earnings and beat numbers, right? A much higher probability in that sort of scenario, right? And meanwhile, the bears are running out of things to work for them. We have inflation that's becoming less of a problem. We have a Fed who's ready to backstop whatever, right? And they're even willing to grow their balance sheet now at this point in time. We have a Fed, and we'll see what happens this week, but that is likely either done raising rates or maybe they have this one last little quarter point move here essentially, okay? So you don't really have the Fed to work against the market now at this point in time. If anything, you've got the Fed there to help the market because now they're starting to help all these banks, right? So Now at this point in time, on the bearish side, you just don't have a lot to go off of, right? And as somebody that owns call options in SDAO, I would love the market to freak out and capitulate and everybody sell their stocks and freak out over this next few months. I'm just, from my perspective, it becomes a very hard challenge to get that to happen, right? Especially when valuations have come down quite considerably over the past, let's call it 12 to 18 months. And so when you look at it from that perspective, the bulls are in full charge, right? We were caught very offsides in 2022, right? Let's just call it what it is. None of us really expected the Fed to raise rates as quickly as it did. No one on Wall Street, the Fed themselves didn't expect that, right? We were all caught off guard and we got absolutely wrecked the first 10 or 11 months of 2022, right? We were caught off guard. And then we had to adjust portfolios, adjust where we're investing and all those sorts of things, right? And we had to play this adjustment game to potentially a little bit higher rates, right? And now at this point in time, we're just in a sweet spot because a lot of our stocks are starting to appreciate greatly, right? And especially in regards to a lot of these growth stocks, they're up 50%, 100%, 150% from where they were bottoming out just, 6 to 9 months ago, right? So we have that going on, right? Meanwhile, we're ready to buy any major dips in the market that we get presented to us, right? Which is a phenomenal thing for us. And we went into this year in just a better mentality. After we got slammed last year, a lot of us went in this year with the mentality of, oh, it might be a rough year. It might not be a good year in the market versus going into 2022 where the expectations were it was going to be a good market. The Fed might raise, but it's just be small raises. So we went in with let's call it more pessimistic mindset. And we, obviously as the year is kind of playing out here, it's emerging a little more optimistic, right? And so you have all that going for everything, right? Unemployment in regards to that, I mean, we haven't seen any massive increase in unemployment at all at this point in time, right? So that whole game of like, everybody's going to lose their job, I don't know about that. Mortgage rates, that's one important component that we need to play out for the bulls. And for if you're kind of bullish on the economy over the next few years, we do need mortgage rates to continue to come down, especially over this next 3 to 6 months. If we can get mortgage rates at least into the 5s, that gives the home builders an opportunity to hopefully sell some homes this spring and summer and into the fall time, which could increase their backlogs for 2024. So homes obviously will still continue to be built right now because what I'm seeing right now is all these home builders, their backlogs are drying up in a pretty substantial way, okay? So we need mortgage rates to fall to get some kind of demand there. So at this point in time, the bulls are in full charge. In any situation we really win, that from my perspective, right? If the market tanks huge, great. I get to buy stocks for very cheap, plus all my hedges are going to print money in that situation. I can go ahead and flip those into long positions, right? And if the market just continues to go up, well, I'm net long. So that'd be a situation where obviously I would just make a lot of money unless every day I have an honest stock, which isn't very realistic in terms of that, right? And so for us bulls, we're the captain of the ship now at this point in time, right? And the bears are just really off sides. And every time they think they got something going for them, it gets shot down so quick now at this point in time. And it's been like that for really like the past 5 or 6 months. They get something, a hot CPI, and then that just kind of fizzles off, right? They get banking collapse, and the Fed's like, hey, we got it. We'll do whatever it takes to make sure everybody's deposits are guaranteed. We don't care if it's 250 or it's 250 million. We got it. And it's like, and so as a bear, you're kind of running out of these scenarios to kind of help yourself out, right? And never mind that, a lot of these bears, they played a lot of these put options and short positions. Meanwhile, being long oil and gas and stocks like that, and it's just like I don't know what they were doing, but that doesn't even correlate in regards to that. I mean, that's if you're bearish on the economy and everything, you can't be bullish on oil and gas stocks. Like, that's not the way this works, or commodities in general, because those things all fall. If you know anything about an economic cycle in the downturn, if you are talking about the economy getting bad or anything like that, commodities are always hit bad. And so, that whole situation is not just, I think bears are just really caught off sides this year. Just like we as bulls were so caught off last year. Okay. And, that's the market for you. That's the market for you. And usually bulls are 7 out of 10 years. Usually bulls are right. Then you get 2 years where it's kind of like, maybe both are right. And then you get kind of 1 out of 10 years that bears are completely right. And last year, damn it, those bears had us, man. They had us on the ropes and they were smacking us around good. Appreciate everybody joining me as always. Much love. Thanks for being subscribed here, folks. I think that about wraps up today's video, if I recall. That was in relation to that video. I forgot about this. Okay. So in regards to the video I did 3 days ago, the buy video, right? I told you that I forgot. This was one last piece of this video that I forgot. I told you that they're going to set it up where they're going to rally this market, but they're going to do it in a smart way so it doesn't attract too much attention right off the bat. And sure enough, that's what they did the first few days, small rallies of some of these stocks, right? And kind of, so basically Wall Street didn't want to make it look like, oh, the Fed has bailed everything out, time to go risk on. They didn't want those headlines to hit. So what you kind of just seen as the weeks transpired is just especially a lot of these big techs that Wall Street loves to be in just continue to bubble up. They played it cool at first. I got to give it to them. They played it cool at first. But, I think we know what's going on now, right? And I told you guys exactly they were going to do this. They're going to play this out, and that's exactly what they did, man. Exactly what they did. I appreciate everybody joining me as always. Thanks for being here, folks. Also, moves coming in the Patreon portfolio tomorrow. If you want to join us in there and see what moves I'm making, you can check out the pinned comment down there. Much love and have a great day.